Today we got data that shows the worst of both worlds for the economy and the housing market, so let's get into it. Hey, for those of you that don't know me, my name is Rick Harrison and I'm a home buying specialist here in Southwest Florida. And on this channel, I bring you the latest tips, tools, and tours to help you decide if this is the right time and place to make your move to paradise. If that thought's crossed your mind, you're in the right place, so subscribe and tap the bell to stay up to date on the latest information, keeping you ahead of the curve. So as I mentioned right in the beginning, the U.S. is getting the worst of both worlds right now, and this headline from Bloomberg kind of explains it. We're getting high inflation right now, and just this morning we got our GDP numbers, and it was a slowdown quite a bit from what they were expecting. So they were expecting around a 2% GDP rate. Right now the GDP rose only 1.1%, so almost 50% less than what we were expecting. At the same time, we also got the numbers for what last month's actual inflation rate was, and that was actually higher than they were expecting as well. As you can see from this chart right here, it actually went down in Q4 of last year. And then in this first quarter, we're back up to 4.9 for the core inflation rate, which is not what the Fed was hoping. And that's actually pushing more towards another 25 basis point hike in the May second to third policy meetings. With that happening on top of GDP falling less, we're getting everything is kind of working against the economy right now, and it looks like we're heading into a pretty rough recession potentially. The second story actually comes from Bloomberg as well, and this is mortgage rates in the U.S. rise to the highest level since mid-March. I thought this second part, this subheading, was pretty funny. Economists say incoming data suggests market has stabilized. Yeah, I don't think so. I mean, the banks are all struggling right now. Even the bigger banks, we're starting to get some data that's coming out that's suggesting that some of those are collapsing or potentially might collapse. We also have a lot of data coming in we're going to go over in these next few stories in the housing market that's showing that things are really slowing down quite a bit in a lot of the areas in the country. But here we got contracts to buy existing homes fell last month by the most since September. There's some discrepancies on what actually was September or November. One of these other stories said it was November, and that's from Realtor.com. Pending home sales fall for the first time since November. U.S. pending home sales fell 5.2% in March. In addition to that, housing investors are also starting to see some pretty bad data as well. 14% lost money on homes that they sold in March. So roughly 1 in 7 investors are losing money. They paid more for the home than they actually sold it for last month, which is obviously not a great sign, and also shows that profit margins are drying up with the interest rates and everything that's going on in the housing market. So these are some graphs. You can find this on redfin.com. It's one of their more recent reports if you want to take a look into the data a little bit deeper. But I'm going to move right on to home sellers' profits. So even outside of investors, just home sellers in general are starting to see decline in profits as well in the first quarter of 2023. As you can see, that green graph here, or the green line, is showing what the actual annual home price appreciation was. If you were watching my video from last week, you know I've been telling you, even in our market, which has been pretty resilient, we're only seeing about 1 to 2% appreciation rates, where as compared to what we've seen over the last 3 years, which is right around 50% in our area, you can tell from going from 50% to a 1%. Is quite a significant drop, even if it's annualized. A few of the highlights from this article: profit margins on median price single family homes and condo sales across the United States decreased to 44.2% as home prices really flattened or declined in some of the areas around the nation. The drop off also marked the third straight quarterly decrease nationwide and resulted in the lowest investment return since mid-2021. Which is just at the start of our real bull market for the housing. The typical investment return nationwide did remain high in the first quarter, almost double where it stood 4 years ago before everything happened. But the margin was off by 12 points from the peak of 56.1%, which is showing that it is slowing down and actually starting to decline in around the United States. The other two stories here are from Adam Data, which is a leading provider in foreclosure real estate data. U.S. foreclosure activity continues to climb in Q1 and actually tripled what we saw in 2020, towards the middle of 2020 and into 2021. However, keep in mind, look at the graph. You can see back in 2008, there was over pretty close to 1 million foreclosures. in those each quarter. And now we're way down. We're below 100,000, but that did triple. So we're seeing activity actually increase. It's just not getting back to where we saw it before. But that remains to be seen. I have heard a lot of issues going on with defaults, even in the subprime market, more especially in the auto and commercial markets, commercial real estate markets. But we probably will see that pick up again in the residential. I've also been getting quite a bit of information coming from some of the REO companies that are suggesting they're expecting to see quite a rise in foreclosures in the third and fourth quarter of this year in activity. So that remains to be seen, but we'll have to keep an eye out on it. And then as far as foreclosure starts go in March of 2023, these are the top 10 U.S. metro areas with the most foreclosure starts. And we have coming in, Miami is at number 6. Miami, Fort Lauderdale, and West Palm Beach, Florida is number 6 in the top 10. But still, it's really only a third of what's going on in New York and some of the more northern, like Chicago, those areas, those metro areas as well. All right, so for the interest rates as of just a couple days ago, as of Monday, the date on this is wrong. It's not 4/18. It was actually 4/24. The interest rates went from last week, we were at 6.8%. That went down to 6.497% just on the 24th. Bank rate had it actually going up 0.1 or 1 basis point. But that actually, as I've said many times, and I will continue saying, these mortgage interest rates follow the 10 and 2-year bond market. So when I had this, we saw the bond market actually take a pretty deep dive for interest rates. And now actually that's come up over the last 2 days and it's right back up to where it was. So we're probably going to be seeing interest rates over the next week go back up to around the 6.8, 6.9 percentage range as well again. All right, local market stats from Cape Coral down to Naples. Last week, new listings were at 929. That went and fell 6% to 878 this week. Solds went from 857 down to 789. That's an 8% decline. Again, that's a lagging indicator, but that is indicating that the market was slowing about a month ago. Pendings, really no change again here. So we're getting about the same amount of people still buying in this area. And that has really stagnated quite a bit over the last couple of weeks. Price decreases also fell 11% down to 1029. Still, though, over 1,000 price decreases in 7 days is still a good amount. And I think that just goes into account that a lot of homeowners are still not catching up to the data yet. What the data is suggesting that the market is slowing, still expecting high prices and high sales. Latest inventory breakdown. Single families went from 5905 to 5918. So that's up 13 units. Starting, as you can see, the theme here this week is stagnation. And we're going to see that probably continue for a while now. Condos 3608 to 3619, up 11. So we had a net gain of 89 last week. We have a net gain of only 24 this week. So that is starting to slow down as well. Multifamilies 108 to 107, 101. We lost 7 there. Foreclosures 46 to 45. We lost 1. Really no big changes there either. Total sales 623 sales over the last 7 days. Out of that, 351 or 56% of those were cash buyers. All right, the next market, the northern part, Punta Gorda up to Sarasota. New listings went from 681 to 717. That's actually up 5%. Solds were also up 7% week over week, so that's up to 716. And pendings, which is what's going on in that market right now, is up 3%. You know, it is a bit of an increase, but as you can see, comparing the pendings for the northern part to the southern part, you know, the southern part had over 1,000 pendings. This only has 846. So even that's up 30%. Really not a huge change here. You can still see that it is starting to stagnate a bit. Price decreases actually fell 11%, right in line with the southern part of Southwest Florida as well. Inventory breakdown for the northern part, we had 4669 for single family units this week. That's up 67. Condos actually fell 17 to 2553. So we had a net gain last week of 29 in this area. We have a net gain of 50 this week. You know, not huge changes, but still it is, you know, any gains are good for the market and prices going down. Multifamilies, 60 to 67. We gained 7 this week. Foreclosures went from 61 to 65. That's up 4. And then out of the total sales of 604, 327 or 54% of those were cash, and that is actually down slightly from the previous week. So we've got a lot to keep an eye on, but not to worry. That's exactly what I do in this channel every week. So don't forget to subscribe. And if you have questions, let me know in the comments, or you can call, text, or email me anytime. I'm happy to help in any way I can. And all my contact info is in the link in the description. Thanks again for watching. I hope to see you on the next video. But until then, stay safe, stay positive, and more importantly, stay free.